Now, here's a headline. Well, first of all, the Dow Industrials are down a mere 20 points. That's not exactly a sell-off. It's a very, very modest downside move. Now, look at this. The headline from Karl Rove's op-ed piece in the Wall Street Journal this morning. Whoa. Opinion: amateur hour at the White House. Now, that's provocative, isn't it? Glenn Hubbard joins us this morning. He's the former chief economic advisor to Bush 43. Glenn, welcome to the program.
Thank you. Good morning.
What do you make of that? Some would call it the amateur hour at the White House, undermining investor confidence. Can I get your comment on that first?
I think it's important to separate noise from signal. Yes, there will be things that happen in any White House, but if you look at the underlying signal, the big policy issues and tax reform, regulatory reform, this is good stuff, and this is where investors need to focus.
But the poor rollout of the executive order on immigration, for example, suggests to people that the rollout of tax reform and deregulation will be equally incompetent. That's the problem.
I don't think so, and for two reasons. One, there's learning, I assume, over time about how to handle things. And second, the Congress has already worked very hard on tax reform and regulatory reform. Speaker Ryan, Ways and Means Chairman Brady have worked hard on the tax bill. A lot of this work's been done.
Okay. You know that you are called Mr. Federal Reserve. You know that. Glenn Hubbard, in brackets, Mr. Federal Reserve. You are tipped as the person who will chair the Federal Reserve after Janet Yellen. You know this, don't you? You're nodding sagely.
I have no idea.
Keep nodding. Right. Because that's what they're saying.
Okay.
Now, here's my story. I think the Federal Reserve, at this moment in time, is irrelevant to investors. It had its day over the past couple of years, but now it's irrelevant. The focus is on Donald Trump, President Trump. What's he going to do? What do you say?
Well, I actually would agree with a lot of what you're saying. We have over-relied on the Federal Reserve for some time because the government has not been functioning in fiscal policy. President Trump has quite wisely said he will, so that's a big plus. But I think it's a mistake to write off the Fed. Come March, the Fed will be in the headlines. We're going to have better data. We'll have another rate hike. We'll have a budget out. And there will be issues about inflation, about rates, about the dollar. The Fed will be back. But make no mistake about it, the Fed shouldn't be the principal engine of discussion. It should be President Trump. It should be the government. That's where policy should begin.
But you just made some news for us. I mean, you are Mr. Federal Reserve, and you've just said publicly on this very well-rated program that we're going to get a rate hike in March.
I think it would be highly likely just based on the data. We know the economy is improving. The economy is at full employment by the Fed's definition. In fact, given the payroll report we're about to see, we may even push beyond that. So I think we're definitely going to see a rate hike. But I don't think that's why there's news. There's news because I think we are seeing a normalization of policy and a handoff where it belongs to fiscal policy. And that's where President Trump rightly comes in.
Handing off from the Federal Reserve and monetary policy, handing over to President Trump and fiscal, tax policy, stimulating the economy with real bucks. That's the story.
Correct, because we've relied on the Fed too long, and monetary policy at this point, at least in my judgment, isn't helpful in reflating growth. Fiscal policy can be.
You realize that we very rarely cover the Federal Reserve on this program, and we very rarely have Fed watchers, much less federal future officials on this program. You should be flattered, sir.
Okay, I very much am. I very much am.
I got a lot of nerve. That's the truth. I got some nerve. But Glenn Hubbard, you, sir, will be back. Thank you very much indeed.
My pleasure.
We appreciate it, sir.
Good.
Thank you.